Welcome to Bears in Exile. Today is Tuesday, October the 23rd, and this is the market overview, looking at everything we look at every single night, and away we go. So last night, we're looking at it. Daily looked poor. 60-minute looked like it was ready for a bounce. Figured we'd be doing a bounce, then a drop, and instead we skipped the bounce and went directly to the drop. How about that? It was pretty, compelling. I mean, we had the possible reversal candle, we had the channel, all of it one place, and instead today, following through all of it. Big gap down right at the open, and really just didn't let up the whole day. Could have been worse, but still pretty darn scary when you're facing down the barrel of essentially a 250 point decline. Whew! It's been a while since we've had one of those. Anyways, where are we now, and what should it do next? Well, here we are now, and is it at a point where it should be caught? I mean, it's at the top of this little area. I wouldn't call that special one way or the other. But we do have right here the lower price consensus level for the previous month, and it almost tagged that. And that's where it bounced up. So maybe a little bit of something there, but wow. Definitely 250 points almost. Crazy. So last night we had a little bit of area in the heat map pop in there, and today certainly much more developed. Now it's actually compelling and not just a very slight warning sign. So that's cool. Beyond that, everything pointing down and everything getting pretty darn extended. MACD histogram, very notable. 14-day RSI moving average, very notable. Stochastics, all very notable. So, daily time frame. Is there anything that should really catch it here? Not especially. Does it look like it's really darn extended? Absolutely. Wish there was more to say beyond that. Wish it was lining up with something, but that's all that it is at the moment. And 60-minute time frame. Yeah, we can see that lower channel here, how it had bounced off it slightly yesterday. And today just falling through it like a hot knife through, you fill in the blank. And then essentially just going sideways. That isn't a good sign. That is just a consolidation. Before it moves down some more, at least at first glance, that's what it looks like. Beyond that, what do we have? Alright, here we are. Beyond that, what do we have? Well, obviously making a bottoming area in the heat map right from the get-go. It did work itself off slightly throughout the day, through time, but really it's still in a bottoming area. Not that saved it yesterday or the day before either. But beyond that, what do we have? We now have a MACD histogram with positive divergence, 60-minute time frame. We're close to a MACD turn. We have the RSI low with slight positive divergence. We have the stochastics trying to turn, also with very slight positive divergence. With the 14-day RSI moving average finally at the bottom and ready to turn, leveling out by the end of the day. And we have the CCI also continuing to try to rise with positive divergence. So, pattern, not good. Heat map, could be better, but not terrible. And secondaries attempting to build on themselves. So, daily pretty darn bad, and 60-minute time frame, questionable questionable. Be right back. Okay, moving right on to SPX. Not overly different. Moving outside the channel, busting out the long-term moving average bar, closing right at the lower Bollinger Band. And where does it stop? Almost at the major price consensus level for the previous month. Is it at a notable place at the moment? Yeah, just the top of these candles here. Nothing especially significant. And beyond that, nothing else really of note to point out. So daily, yeah, it doesn't look great, except that it is oversold. Short term, very short term. Moving on to the VIX. Yeah, now we can get something that might actually help us a little bit. For one, closing outside the upper Bollinger Band, closing above the 200-day moving average, busting out the previous high, all good signs. Well, not the upper Bollinger Band part, but the rest of it, very nice. We've crossed completely the long-term moving average bar. At some point soon, we should have this turn around, go down and hit it, and then we'll see if it bounces off or not. Certainly we don't have any indication of that at the moment. Do have a tail at the top, but it is early. Beyond that, really good blip in the heat map. Haven't had that in a very, very long time. 14-day RSI moving average high, and should be ready to turn soon. Very high on the CCI. Stochastics are almost there. RSI is almost there. MACD histogram and the MACD getting up there. So I don't think this is going to run to $25 or something crazy like that. But I do think it is getting kind of long in the tooth in the very short term. But really a lot of good bullish development for the midterm. And we'll see when it runs out of steam in the short term. But that's what I see. Moving on to TNA. This one is different. This one is very different. We had the channel. It fell out of the channel. It was able to recover itself by the end of the day. A good thing for bulls. It pierced the 200-day moving average, which in itself is a good thing for breaking it later, but it was able to close back above it. Also a good thing, very short term for the bulls. It went right down into this area of a previous low and was able to bounce, continuing to form a bottoming area. We said it was early back here. It's getting more extreme, but it's not covering everything yet. So that could be better, but it is getting, it is building in its intensity, which is a good thing. Beyond that, we have positive divergence in the MACD histogram still. I suppose that could be broken in the next day or two, but it's there for the moment. RSI going sideways, 14-day RSI moving average getting low in the short term. Stochastics almost getting there, and CCI also fading. But really, the candle, hammer, bottom of a possible range, and able to recover itself into the channel and recover the 200-day moving average. Very positive signs. This looks better than the Dow, looks better than SPX for a bounce. And if this bounces, they should go along with it. So another reason to believe that a bounce is forthcoming. We shall see. We'll definitely know before the end of the week, that's for sure. UUP, the dollar. Yeah. Another interesting little tidbit. I'd drawn this line a while back after our first hit and attempted second hit and the piercing third hit and the closing above fourth hit and then the denial and the re-pierce fifth hit, and now another pierce and unable to close above sixth hit. That's pretty darn crazy. So you could say, oh, well, then this line isn't any good. We should have a different line somewhere. I don't know. I don't know if I agree with that. I'm just going to keep it the way it is. And so certainly it shows us that there is a significant resistance at this point. It wasn't able to make a new recent high. We don't have anything in the heat map saying that this is a problem. But look at this. What is this? This is either it's a gravestone doji or it's an inverse hammer, both of which potential reversal candles, top of a possible range, and yeah, there is more area for it to move in the 14-day RSI moving average and some of the other secondaries, but this looks pretty close to another short-term turning point. So, matter of fact, I'm going to look at the 60-minute. And here we are. We can see that line that I was just talking about. Where does this go? It goes up, it stops at it, it retreats a little bit, and goes up again, almost kisses it, retreats again. So yeah, I think that this line is good. Very strong topping area in the 60-minute time frame. We can see everything is already starting to fall apart. 14-day RSI moving average down tick from a top by the end of the day. It could get stuck there, but it could also move on down. Stochastics trying to get underway to the downside, along with the RSI. I'm sorry, the CCI. RSI is having a little bit of problems. MACD histogram is trending down, and a downtick on the MACD itself. This is extended. This is extended. I mean, it could have a breakout and then not care about all of this and everything will just fly up again. But for the moment, 60-minute time frame, it looks precarious. It does. So, good for the bulls, potentially. And but that would be a short-term move. Short-term move down. And filling this gap would actually be natural and healthy. So move down from this point, I don't have any problem with that. As long as it breaks out to the upside at some point from this wedge, I think that would be very nice. We shall see. Moving on to Comp Q, the NASDAQ. Aha! Yet another something. 200-day moving average, almost kissing it, bouncing off. Doji star, possible reversal signal at the bottom of a possible range. Bottoming area forming in the heat map. Everything pretty darn low. So just waiting for a signal for this to turn, but it would seem natural at this point. Of course, it looked natural potentially last night. Now it's more developed. So, not bad. Moving on to Apple. Oh boy. Whew. After such a nice showing yesterday, just falling apart. But all is not lost. Not for the Apple bulls. You have ascending lows. You have an increase in the bottoming area in the heat map. You still have everything pretty darn low. You still have positive divergence. We still have 3 days for this uptick to resolve itself, going to 640. So, I mean, you would look at this initially and say, ugh, Apple looks horrible. But, yeah, I'm not convinced. And I think that we'll see this one start its real turn by the end of the week. I really do. Maybe it'll be tomorrow, but yeah, I think by the end of the week. Just my guess. Moving on to GEE, trying to get a better read on the Dow. Wow, that is impressive. We had that really good potential reversal candle last night. It just didn't care. Gapped down, spinning top, completely outside the lower Bollinger Band. This should go sideways or up to get back inside. Bottoming area in the heat map. Starting to try to turn up in the CCI. Everything else going low and getting pretty darn extended on the MACD histogram, and already low on the stochastics. The 14-day RSI moving average does have more room though. So there is a caveat. And anything special about where it stopped? No, not really. Very interesting. But placement of that candle, type of candle, this sucker is really close. Really close. Maybe as early as tomorrow. And JP Morgan, most important bank, had the downtick resolve a couple of days ago. Had a potential reversal candle. Instead decided to come down. Long-term moving average bar, major price consensus level, spinning top indecision candle. We should have lots of support here. Nothing of note in the heat map. It looks like we have more to go on all of the secondaries. So that's something, but there, it is at major support. And going on to XLF to finish off the night. Oh, almost finish off the night. We were saying last night this one was much better than JP Morgan all by itself. It went down anyway. Long-term moving average bar, not yet to the major price consensus level. Not able to make a new recent low. So ascending lows still in effect. And a new downtick on the 14-day RSI moving average when it was already pretty low. Everything moving to the downside, nothing in the heat map. Yep, this one also looks pretty questionable. So except for support, this one does look bad in the daily. Wow. Very impressive. And USO to finish off the night. Alright, when oil is bullish, market is bullish, and vice versa. That looks crazy to me. Very clean hammer, completely outside the lower Bollinger Band. Stopping. Oh, it was so close to this major price consensus level, but didn't quite get there. Definite blip in the heat map for a bottoming area. Nasty. 14-day RSI moving average rising from a low. Stochastics getting to a low. CCI at a low. RSI ticking up. MACD histogram ticking up. We have quite a bit of positive divergence here. On the MACD itself did complete a bearish cross. So pretty darn mixed, but candle and where it is and all the other factors, this sucker needs at least a little bit of a bounce or sideways movement tomorrow to get back inside. Should help the market out. Tomorrow is FOMC second day meeting, and we'll see what they have to say. Wow. So how about that? Totally skipped the bounce. The longer term negative outlook was arrived much faster than expected, and now we're even closer to what should be a bounce, but lots of damage done. So much damage done. Tomorrow should be very interesting. We should get a much better picture tomorrow. I'll keep my fingers crossed. As always, all investing decisions are your own. This chart and video for entertainment, educational, and consumption of time purposes only. Thank you.